Hello, and welcome to Virtual Investor Conferences. My name is John Viglotti, and on behalf of OTC Markets, we're very pleased you joined us for the 3-day Uranium, Battery, and Precious Metals Conference. Our first live presentation is from Bannerman Energy. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view our presenting company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Brandon Munro. He's the Executive Chairman and Managing Director of Bannerman Energy Limited, which trades on the OTCQX Best Market under the symbol BNNLF and on the ASX under the symbol BMN. Welcome back, Brandon.
Thanks very much, John, and thanks to everyone for joining us. It's a fantastic time to be talking about uranium, and I'm very proud to be presenting the Bannerman story to everyone out there. Now, of course, this is a presentation that you can access on our website, which is your opportunity to pay close attention to those disclaimers. Let's just talk about what makes the Bannerman story really quite unique in the current uranium sector market. So we've been working on the Etango projects in Namibia since 2006. And now after all of those years, we can now boast one of the world's very largest and most advanced uranium projects that's out there. Being in Namibia, it gives us tremendous advantages when it comes to developing this project. We've had the opportunity and the approach that has enabled systematic de-risking of this asset and this proposed mine to ensure that now we finally find ourselves fully permitted on a clear pathway to development. And truly, the timing could not be better. We've stuck with this asset and we've carefully stewarded shareholder value during a very difficult bear market after Fukushima. And I would say we're just in the first innings. We're now 2 to 3 years into what I anticipate will be at least a decade-long upcycle in this sector. And to have a shovel-ready project on the eve of development into such a strong bull market thesis positions our company and our investors exceptionally well. So let's now have a little bit more of a dive into those different project attributes. First of all, I mentioned it's a very large scale asset. So we've got more than 225 million pounds in our existing resource. That's just a single resource at the Etango project. It's open at depth. Back in the day, we drilled enough 500 and 600 meter holes to know that the ore body continues and the mineralization continues and possibly improves. But for the current resource that we're dealing with, we've drilled down a few hundred meters for that 225 million pounds. In addition to that, we've got a large satellite resource that's within easy trucking distance of where we will build our primary crusher that will also add longevity to this project and contribute to what we expect to be a multi-decade mine. In addition to that scale, we've got exceptionally good scalability, which will be one of the key themes coming out of this presentation today. From that 225 million pound resource in Etango, only 60 million pounds finds itself into the initial mining reserve. And that's the initial mine life of the first 15 years. The way to think about this project is like the Rossing uranium mine in Namibia. That mine, which continues to this day, started in 1976. And when it first started, it had a 16-year mine life, and it's become a multi-decade mine. It's recently surpassed 45 years and extended its mine life by another 10 years, simply by drilling deeper, recovering more resources under the current mining plan, and giving them the scope to move into being at least a 55-year-old mine. That's what we hope to deliver here at Etango. So that will be achieved through scalability. And just in the last few weeks, we've released a study that demonstrates both the potential to expand the life of the mine, but also to increase the scale, which will place us as a very large uranium producer in this very supply challenge sector over the next coming 5 to 10 years. The next point I'd like to make is to dwell on the fact that being in Namibia is really a huge advantage for us. And I can speak with some authority about Namibia because I've been involved in the Namibian uranium sector since 2009. Back then, I was with Bannerman and I moved to Namibia with my family, spent 5 or 6 years there. The first thing I needed to do was supervise and oversee Bannerman's environmental permitting process, which was ultimately very successful, and also was general manager in country for Bannerman. I also worked in other aspects of the Namibian resources sector, and I've done lots of interesting things in country, including being on the council of the Chamber of Mines, being a trustee of the Namibian Uranium Association, and so forth. I did move back to Australia, which is where I'm dialing in from now, in 2015, and shortly after that, I was appointed CEO of Bannerman. Held that position for 8 years, and we've just very recently announced the exciting news that Gavin Chamberlain has taken over the CEO role, which has given me the opportunity to become executive chairman. A little more on that later. Firstly, what makes Namibia special? So the way to think about Namibia is it's, with Botswana, almost universally recognised as amongst the very best mining jurisdictions in the whole continent of Africa. It's easy to operate, it's inexpensive to operate, it's a politically stable country, it's very secure, there's internal security, people are friendly and willing and hardworking. So it has all of those attributes that's earned it a very good reputation for mining any commodity, really. But where it really sings is its uranium mining and development attributes. Unlike, unfortunately, the country that I'm broadcasting from now, Australia, Namibia has absolute political commitment to uranium mining. It has governmental and regulatory support for uranium mining. It has broad social support. You can see from that map that we're very close to the town of Swakopmund and Walfish Bay. Well, look, a lot of the infrastructure in Swakopmund was built on the back of the Rossing uranium mine over the 40 or so years it was owned by Rio Tinto. To have that broad support and confidence is an immeasurable opportunity and advantage when you're facing the typical challenges of developing any mine, but particularly in a highly controlled, highly sensitive commodity such as uranium. Now, you can lay on top of that the fact that there's 3 operating mines in Namibia. So there's an uranium mines, that is. So there's an ample workforce that understand uranium, that are trained in radiation management, safety, and all of those aspects. Plus, because the Rossing uranium mine has been such an intergenerational feature of the Namibian uranium and mining sector, even when you find the staff for gold mine, half of those people have been trained at Rossing. So they might have had the most recent experience in gold or copper or zinc. However, they've got the underlying uranium experience. And that's very important for accessing a workforce and also for accessing expertise in management and senior ranks. Very clear mining code, great infrastructure. I wouldn't want to be in any other country developing a large-scale, scalable uranium mine into this looming supply deficit. I mentioned before that we've been around since 2006 when we discovered the Etango project. Bannerman has been relentlessly focused entirely on that asset throughout that entire period. What we've done with this slide is we've, in the green, labelled key company changing events, de-risking events over that entire journey. And we've set that against the uranium price. Now, the reason we've done that is to give you a couple of clues as to the development and de-risking of this asset. First of all, because we made the discovery during the last uranium boom, we had access to ample, very cheap capital. And that's what's required to drill out such an enormous resource. In fact, we were able to raise so much money during that period that we drilled more than 300 kilometres into this enormous Etango resource. That's not something that could have been repeated in the subsequent 15 years. But as we entered the very dark period after Fukushima, we were blessed to have had an enormous amount of drilling, a very sturdy resource, and a lot of technical and metallurgical work already done and already paid for. And that meant that as a company, we were able to weather that downturn and come out of it very strong. More recently, we've been focused on the Etango 8 development, which I'll talk to you about in a moment. But in the intervening period, a decision that we made that has really reaped benefits and dividends today as we move through financing of this shovel-ready project was to build a demonstration plant. That was to demonstrate beyond any reasonable doubt the effectiveness and the efficacy of the sulfuric acid heap leaching processing route that we're fortunate that this ore body responds to. We'll talk a little bit more about that in a moment. So the upshot of all of those years of very studious, very tenacious technical work is we have a highly de-risked asset that's conventional and easy for both our customers but also our investors to understand. Now, I'm sure many of you are on this call and following this program because you're interested in uranium. So we can come back to this during questions. I don't propose to dwell on it right now. I just want to point out a couple of things that will help you understand our strategy. Between now and 2030, 2032, the way I read this market is that it's a supply-driven story. Demand is baked in. In that time frame, it's pretty assured. You know, you can't build a nuclear reactor without the world knowing about it. There's some upside that's coming to bear right now towards the end of that period. However, this market is responding and the investment community is responding to the risk of supply being available in that period rather than short-term demand incentives and short-term demand catalysts. Now, what does that really mean? Well, it means, as you can see from this graph, you've got a demand case charted moving from 2021 out to 2040. And these are the World Nuclear Association numbers that I know very well. If the supply case responds just right, well, then we will be in a position where that demand is met. But we know from the mining game, and we're already seeing in this sector, that that's just not how it works. You see, there are many, many challenges, jurisdictional challenges, technical challenges, funding challenges associated with bringing new uranium mines into development and even restarting old uranium mines that lead most investors in this sector to understand that even in this short-term period, there will be significant supply catalysts that will drive both the investor opportunity but also uranium prices higher. That's the short term. What I'd now like you to look at is the large grey triangle, that huge wedge beyond 2032, which is the period of time when we intend to deliver our expansion of our project, our doubling of production, that will take advantage of the exceptional market dynamics that we anticipate as that shortage really bites and as the supply deficit really starts to drive economic opportunities in this sector. So now a quick snapshot of Bannerman. And in Australian dollars, please forgive me if you're dialing in from the US, but in Australian dollars, we're sitting at a market capitalisation of about 550 million. That's a bit under 400 million US. We've got a very strong cash balance with a extremely rigorous and disciplined approach to spending. So at the end of the calendar year, 31 December, we had 35 million Australian dollars in the bank with no debt. 3 months on, in the midst of bringing a project towards construction, and we've still got 31.7 million in our bank. No debt, no convertibles, no significant warrant issues, a very clean capital structure. And you can see from the growth that we've had in delivering shareholder value over the last 12 months that this is a project that's really coming into its own at a perfect time in the life of the uranium sector. So with that in mind, let's just look at what the key attributes of our Etango uranium mine are in Namibia from the investor's perspective. So the first point is, as I showed with that company history graph, we've got very strong technical and commercial viability that have been demonstrated at a DFS or definitive feasibility study level. And I'll show you what those numbers look like in just a moment. It's really important to understand that this is conventional production. It's conventional truck and shovel, open pit mining. The ore body outcrops at surface, so there isn't even pre-stripping required to get to the ore. It's got a very low stripping ratio, and then the processing or the milling couldn't be simpler. We crush it down to about 5.3 millimeters. That goes on to a standard conventional sulfuric acid heap leach circuit with very, very fast and high recovery dynamics. And we've had the benefit of operating a long-term demonstration plant or pilot plant to really systematically prove all aspects of that. It's really important to think from an investor's perspective that we very recently had what can be some of the most important catalysts in this uranium sector, and that is the final permits that are required for us to be able to build and operate the mine. Why is that so important in uranium? Well, as we've said, uranium is a very environmentally sensitive, socially sensitive, and in many parts of the world, politically sensitive sector. And permitting, as many of the our peer developers know well, is a huge risk, both in terms of outcomes, but also time. So for us to be able to tell you as an investment community that we are now fully permitted following the grant of our mining license at the end of last year gives you a lot of comfort, and it also enables me to position the company to take real advantage of the incoming momentum into this uranium sector as nuclear power demand and attributes build. Next point I'd like to make is we've got very strong sustainability credentials. I'd love to talk about that if anyone's interested during the question time. Very skilled development team, which I'd like to expand on. And we are a project of national and international importance because of our scale and the way that we've gone about it. So, what does the initial 15-year mine life look like prior to undertaking expansion and extension? So as I said, it's a 15-year mine life initially. At 8 million tonnes per annum processing, it will yield 3.5 million pounds annually of yellowcake U3O8. That's enough for 7 to 8 conventional gigawatt scale reactors. So the reactor in the US at Vogtle that's just turned on, our mine would be able to provide the fuel for 7 or 8 of those reactor types. So it's a very large project that has a very significant impact. We're very pleased and proud of our operating costs at $35 a pound, and it has modest capital requirements for such a large mine at $317 million. They were the DFS numbers that we provided just over a year ago. We published that study in December 2022, and we've had the advantage of being funded to continue with that work through front-end engineering and design, so that we're able to ensure that those numbers have not gone stale. What does that mean for investors? At a $65 base case, it produces pretty good returns, but we weren't developing this project for $65 uranium. And we've had a long-held belief and conviction that uranium would need to settle at least $80 in order to incentivize the necessary level of new production. And I think we can add inflation onto that, and I would expect the minimum incentivization levels to be significantly above that today. Be that as it may, at $80, you can see that it delivers a significant uplift on the post-tax NPV at 435 million US and a healthy post-tax IRR of around 25%. So from $80, this project starts to look fantastic economically. But I've been talking about the leverage that we can get from expansion, and that's the study that we've recently put out into the market. We released a study that considered 2 alternatives. The first one, Etango XP, which stands for expand, that had us expanding from that 3.5 million pounds to 6.7 million pounds over a 16-year mine life. The alternative, Etango XT, which stands for extend, assumed that we didn't reinvest in building our capacity and we just ran out that average 3.5 million pound production for 27 years. In each of those studies, we closed off the production at a pit shell that would recover 95.2 million pounds. Not because that's the end of the ore, but because that's what made sense for the study that we were doing. Like the Rossing uranium mine, I'd expect that the market conditions by then would be calling for us to continue mining deeper into the open pit ore body to recover additional pounds. What these two studies have done is demonstrated the really exceptional leverage that Etango and therefore Bannerman can deliver into higher uranium price assumptions. So if we look at what that means, along the bottom of this slide are the $80 price assumptions that I showed you for Etango 8. That's our first phase development over 15 years. In the middle, we've taken that same price assumption and shown how the post-tax NPV grows for Etango XP by 40%. And if we're simply extending the mine out, then that post-tax NPV still grows by another 21%. But most investors that I'm talking to today are using price assumptions well above $80. And even if we just use current market dynamics and select a price assumption of $95 a pound, you can see that Etango XP post-tax NPV really demonstrates that superior leverage by growing to just shy of $1 billion US. Remember, that's against a current market capitalization of less than 400 million US that Bannerman has today on the ASX. So very strong leverage. It's really earned our reputation for being the most leveraged uranium player on the ASX and therefore most exposed positively to higher uranium price assumptions as this sector starts to evolve. So that's our demonstration plant. We ran it in 6 phases over several years. As I said, we systematically demonstrated that we can achieve up to 93% recovery in only 22 days. And that helps to ensure that our economics are as strong as I showed you before. We have all of our environmental approvals to enable us to both construct and operate the mine. We have our heritage approvals and we now have our mining license. Many community programs. We're well regarded in Namibia. We're regarded internationally as a leader in CSR, ESG and sustainability as per some of the awards that we've received. And a very skilled development delivery team. Very deep experience in Namibia and very deep experience in uranium, complemented by a sophisticated understanding of the entire nuclear value chain that comes from myself, Mike Leach, who was the managing director of the Rossing uranium mine when it was the largest uranium mine in the world, and Olga Skolyakova, who's recently joined us from World Nuclear Association, where she worked for 7 years following a long career in this sector where she'd done everything from joint ventures when she worked for Areva to selling enrichment into the US market. As I said, it has a very large impact both locally and globally. And since receiving our mining license, we're now in early stage construction activities. We're currently constructing the access road to site and the temporary water pipeline that ensures that we're not going to be subject to the logistics of trucking water when we're ready to start site works and mixing concrete and so on. So where does all that leave us? With the grant of the mining license, that's enabled us to focus now on financing and contracting. And the financing piece is predominantly led by a strategic financing process that we're in at the moment. And what that means is we want to test the availability of industry money, which is more closely aligned, which is increasingly exposed to anxiety about supply security, and which is a much lower cost of capital than what we would be able to achieve with a debt syndicate, for example. That will enable us to continue our current pathway towards construction, where we've completed front-end engineering and design, and we're now moving into detailed design, and that would position us to be producing at full capacity during 2027 at £3.5 million, with the fabulous option of then moving to £6.7 million to take advantage of superior market pricing as this sector moves into that fat grey wedge that I showed you on that supply-demand curve. So in summary, we're incredibly well positioned amongst a very small handful of substantial shovel-ready greenfield projects in the entire uranium investable universe. This is available on our website. It gives you a lot of additional insight into our numbers for all of those different development pathways. And I think what we can do is we can leave it there for now, and I'll check to see what questions have popped up. Okay, so the first question, global drivers behind the surge in uranium pricing over the past year. In essence, there's a very positive demand profile, particularly out beyond 2030, that has really only come into being since COP26. Before COP26, yes, we knew that the world needed more nuclear power and needed more uranium, but there was still a contest between new reactors being built and reactors being shut down, either because they reached the end of their 40-year life or because they were shut down prematurely for political or economic reasons. Since COP26, that's changed dramatically and fundamentally pivoted since COP28. We're now not in the environment of closing down reactors. Reactors are having their lifetime extended from 40 years up to as much as 80 years. And we've gone from closing down reactors prematurely to the first example of a closed down reactor being restarted at Palisades in the United States. On top of that, as various industrialized nations around the world, together with key emerging markets such as China and India and the Middle East, are realizing that they need dramatic levels of nuclear power in order to address the challenges faced by decarbonisation. That combines with some of the fragility in the supply cycle that I talked about before to lead various industry players, whether they're utilities, traders, intermediaries, investors, to understand that all of the market signals point to an increasing price. And we've seen the first development of that over the last 12 months. Now, interestingly, the key financial investors such as the Sprott Physical Uranium Trust has only played a very muted role in the increase in uranium prices from, say, $50 a pound, where they settled around the time of the Silicon Valley Bank collapse, to where they are now at just shy of $90 a pound. That's been fundamentally driven as those supply and demand dynamics mature. Okay, the next question, infrastructure needs at Etango. Thank you, good question. So we're very blessed at Etango. I'm going to see if I can bring us back to a previous slide. Okay, I'll just have to go through it manually here. So very blessed at Etango because, first of all, Namibia does have very good power, water, road, rail infrastructure. In our case, we find ourselves right in the midst of all of that. The only infrastructure that we need to build is we need to connect our mine to the grid power that's very close by, and we need to build a 30-kilometre water pipeline so that it links with the reservoir that's fed by an existing desalination plant. We won't take groundwater. That's not sustainable in an arid country. And fortunately for us, there is excess capacity in the existing desal plant, and we've received an offer of water over that for our mining requirements as well as our construction requirements. So we're comfy on water, we're secure with water, and the cost of that pipeline is already in those capital cost numbers that I showed you. To export our product, it's a 70 kilometres by highway straight to the Walfish Bay port, which has been exporting Class 7 or radioactive materials for 45 years. There's 2 large towns within a short commute of our mine, and we're even about a half an hour drive from an international airport at Walfish Bay. So for us, that's really a tremendous advantage to have all of that infrastructure right around us. So I've got a question here about, do I consider my stock undervalued compared to your peers? So no CEO wants to admit that his stock is undervalued because, it points to the level of and effectiveness of promotion that they've done. But I will point out a couple of things that I think provide some context for, I think, what's behind that question, which is we are widely perceived as being undervalued compared to our peers. So the first point is, it was only right at the end of last year that we received our mining license. And this presentation and some of the discussions that I've been having are the first real opportunity we've had to reposition Bannerman as being a shovel-ready project, together with the release in the last few weeks of the studies that show the expansion and extension leverage that we have to this building and expanding uranium market. I think in that context, as the investor community and as the market starts to come to terms with the numbers that I showed you in that slide, the very unique position that we find ourselves, and the fact that with that expansion, we've got our own pipeline. So we can be compared to some of our peers that have got a pipeline, but maybe they've got it in different development assets, in different jurisdictions with different challenges. And I believe that I can make the argument that we've got a superior pipeline because we can move from 3.5 million pounds to 6.7 million pounds. We're doing it at our own mine. At the point that we make that decision, our mine will be operating well and profitably with our own workforce in a jurisdiction and a regulatory environment that we deeply understand, and with investors and financiers that are already entirely comfortable with our project. So for a second phase development, I would argue that it's far more attractive to expand into this enormous Etango ore body than it is to take on a new development project or merge with another mine in a different jurisdiction, which presents a unique set of challenges and obstacles. So I'd like to be asked that question in a few months if I still feel that I'm undervalued. And hopefully by then I can say, no, I think all of that latent value in the company that's been presented very recently to the investment community is now being recognised. Okay, the next question. Can I discuss my financing and offtake agreement? So I mentioned that we're in a strategic financing phase at the moment. Now, what that means is we announced to the market towards the end of last year that we would be undertaking a strategic financing to assess the role that industry players, including potential customers and other players in the nuclear sector, can play in assisting us with bringing our project into development. We did that after spending a couple of years ago, deeply evaluating what a conventional project financing would look like. In other words, for example, syndicate of banks, 60 to 70% debt with 30 to 40% equity. So we engaged debt advisors. We spent a year with them, ironing out all of our internal processes, keeping our house in order, making sure that we had everything lined up that a financier would want to see, everything from ESG to legal structures, and at the same time gained a detailed understanding of the applicability of a conventional financing to our project, what our project would need to deliver, what sort of debt coverage ratios, how much we would need to contract, all of those things that you need to understand if you're weighing up a conventional financing with a strategic financing. With the grant of the mining license, that gave us the opportunity to then move into the strategic financing proper, and we're really pleased with what we're seeing. The supply tension in our sector is evident from the risk tolerance and the wide range of parties that are engaged with us as a result of that strategic financing. At this stage, we're not in any hurry to complete it because the market's doing a lot of the work for us, as you can imagine. And so at this stage, we don't know what our financing requirements will be. It's a wide range of different potential structures, which include everything from offtake financing to joint venture financing to royalties and other instruments in between. To answer the question about offtake agreements, as we stand today, we have maximum flexibility to respond to the requirements of that diverse group of potential industry financiers. What I mean by that is we don't have any strategics on our register. We haven't taken any investment into our project. We haven't got any third-party royalties, and we haven't committed any of our product. So we are unaligned and wide open to present the best range and of viable alternatives to the greatest variety of potential industry financiers. So as we stand at the moment, we don't have any product that's under agreement or contract or otherwise committed. Okay, there's another question here, which is, can I discuss the recent management changes? Thank you. So I touched on it towards the beginning of the presentation. So after 8 years as CEO of Bannerman, I had the pleasure of handing the reins over to Gavin Chamberlain, and I moved to executive chairman. For the folks in the US that aren't familiar with executive chairman, that means that I remain an employee, an executive in the company, and I'm the chairman of the board. And that's enabled me to shed a lot of the operational and project development responsibilities of a CEO in favor of having more time to be market focused, investor relations focused, and strategically focused. For example, the strategic financing. Why did we appoint Gavin? Well, as we moved into this important and exciting phase of our project, i.e. constructing a large and scalable uranium mine, the board felt it was very important that we could show investors that the person running the company at the helm of the company was a proven mine builder. And Gavin Chamberlain certainly is that. He's got a 30-year history of building mines in Southern Africa and in some vastly more challenging parts of Africa as well. And on top of that, he's got very relevant expertise within the Namibian uranium sector. So he was the project developer who constructed the Husab uranium mine in Namibia. That saw him in and out of Namibia for 6 or 7 years, constructed that initially for extract resources and then handed over to the acquirer, CGN, the second largest Chinese utility. So what that meant is that he's the guy who was responsible for building the largest uranium mine in Africa and the largest mining development, single mining development in Namibia. That gives us tremendous comfort as a board and certainly as investors. If you were to put Etango against Husab, when you take into account the difference in scale, so Etango's 320 million, Husab was 2.2 billion. The difference in complexity, they've got IX, SX circuits, tank leaching, an acid plant. All of those factors, the difference in workforce, just the scale. The complexity and challenge associated with building Etango is an order of magnitude less than Husab. And so I feel entirely confident that the challenge ahead of us, the execution challenge of building Etango on time and on budget, is well within Gavin's proven expertise and experience. And he's already started using his network to make some key appointments that we'll start talking about in social media next week. So that management change, I think, has been a huge benefit for investors. It's been great for the company. And in terms of what we can now do going forward, I think it really positions and empowers me to spend more time doing the things that I'm better qualified for, to leave Gavin to do the things that he's an expert at. Okay, just reading through the questions if we've got there. There's one last question on sustainability. And if anyone out there has got more questions, we've got a little bit more time if you want to put them in the queue. So sustainability is vitally important for a uranium developer and a uranium miner. And it comes back to all of the deep sensitivities associated with our sector. Now, the nice thing is that before anyone was using the word ESG, or the acronym ESG, and before anyone was talking about CSR, corporate social responsibility, any switched on uranium company knew that they needed to invest in local community relationships. They needed to ensure their governance was absolutely beyond reproach or criticism, and they knew that they had special environmental responsibilities because of the sensitive nature of what we mine. And then luckily for us and our peers, we started to get recognised for that because of ESG. So we've been hard at it ever since we were first in country. We've always maintained a management team in Namibia, and even going back to 2009, I was very involved as part of our environmental and social impact assessment in numerous programs that we still have running to this day, including the Early Learner Assistance Program, which has assisted more than 3,500 children stay at school. The partnership that we've got with the tourism sector, other educational and conservation programs, and an exemplary environmental record. And as you might have seen from one of those slides, that culminated in us, that's a snapshot of the different programs that we've got running. That culminated in us winning the African Mining Indaba Community Engagement Award last year. So that's really the biggest gong that you can get as an African miner or African developer. And so we were extremely, very, very proud of the team for the hard work and very passionate work that they've done to put us in that situation. So it looks like that's it for the questions. Thank you very much to the organisers. Thank you to everyone who's joined us. We really do have a compelling story to tell, and at a time when the uranium sector is delivering on a long-held promise to become an enormously important contributor to both investment opportunities, but also the broader decarbonisation piece that underlines the industrial security and the social and industrial privilege that we all want to have going forward as we face challenging times in climate change. So I'll leave it there. Please look me up and look us up in the various social media and communication channels that we offer. And we'd be excited and we'd absolutely delight